What's up everybody? Welcome back to the Contrarian. It's been a little while since I made a video. I had a really good weekend and a half long vacation down in California, but it's good to be back now, and I'll be putting out hopefully a helpful video for all of you guys who are looking into investing into commodities, also hearing my thoughts about why I'm very convinced that we are just in the beginning stages of a commodity super cycle bull market that will last many years, multiple years, if not potentially a decade or more. I do believe that this trend started back in 2020, just after the COVID recovery, when commodities performed very strongly against other equities and other assets. I do believe it started back then, and basically it comes down to a stagflationary period, how it's very clear in my mind, looking at a lot of economic data out there, that we're entering into a period of stagflation where there's essentially a slowing economic growth on a global basis, not just talking about the US, and also a period of high inflation where inflation remains at elevated levels, not necessarily as high as it is right now, but still at, way above where the Fed would like it to be. So basically, why commodities? Why go into commodities versus, something like tech that's performed very strongly recently, in the last couple decades, versus other stocks, consumer discretionary stocks, etc. Basically, commodities have outperformed practically every other asset class during past extended periods of stagflation. A good example of this would be the 1970s, the period during the 1970s leading up to the early 1980s. Stagflation was a very pressing issue, and stagflation is almost always driven by energy being hard to come by, basically energy demand being way above energy supply, also usually coupled with geopolitical issues going on at the time. And this was definitely the case during the 1970s. It's looking like it'll be the case right now. So right now, stagflation is beginning to rear its ugly head. It's, we've now had 2 consecutive quarters of contracting GDP here in the United States. Europe is in much worse of a situation than the United States is. China is also facing immense economic slowdown in the growth that they've had in the last couple of decades. So it's a global case. It's not just looking at one economy or the other, just talking on a global basis, whether you're looking at demographics slowing, whether you're looking at the debt loads of basically any developed country being way above where it was during past periods where other assets have outperformed commodities. And because of this, commodities have really been overlooked since this past time when they were very popular. They became popular as the bull market got going, and it was really towards the end that people were, much more heavily invested in commodities than right now. And so, because of this, you really want to look at the rotation of capital flows. Where are fund managers going to be putting their money, their clients' money, when tech, when other stocks and assets and real estate and bonds isn't performing near as well, or even if it's, performing negatively year over year and, year after year, where are they going to put their money? And it almost always takes time for them to realize and, go into commodities more and more. But this rotation is going to be immense, in my opinion, at a coming point when people begin to realize on a broad basis that inflation is going to remain elevated, the Fed is going to have to continue to ease regardless of where inflation is, simply because the economy is so weak. And we're really just not seeing the comeback of the economy. Speaking for the United States specifically, the Fed is just arguably going to need to pivot very soon, simply based off of what the economy is doing. All of these tech companies, which have been massively beneficial to the employment numbers, suddenly starting to lay off hundreds of thousands of employees. That is not a good sign. So it's definitely a case where, in my opinion, the Fed eventually in the United States does have to pivot in that kind of a scenario. In other European nations, Asian nations, central banks are actually already pivoting, even though inflation is way above where they would like it to be. So basically, why to be in commodities is because they outperform practically everything else during the stagflationary periods, which is what I believe we're already in and what will become more apparent in the near-term future. So this sets up for a commodity super cycle, such as what was present during the 1970s. And during commodity super cycles, base metals, aluminum, steel, industrial metals like copper, nickel, and platinum, palladium do well, as do energy commodities, natural gas, oil. Uranium is what I'm particularly interested in right now with regards to how it's being valued, how producers of uranium are being valued compared to other energy producers. I was early on a lot more into oil producers than I am right now. I simply have exited most, if not all of my, actually all of my oil-related positions, as I do think that temporarily they could underperform a lot more overlooked areas like uranium producers and also other commodity producers that are not in the energy sector. Precious metal producers have almost always been late to the game in past periods of stagflation, so it's really only in the latter half, arguably, that they really start to outperform and really start to shine, as it were, related to other commodity producers. But I really do not want to miss the boat on that, so I am heavily invested in precious metal miners, precious metal producers, and also some junior exploration resource plays, which I do think will be very attractive for basically large cap mining stocks to acquire as the bull market goes on in precious metals, as it continues to gain momentum. So to start off my actual positions, this is probably what you've actually been waiting for. My largest positions are in ETFs related to silver producers. First and foremost, I think silver is arguably the most undervalued commodity out there. Then going down the list, we have uranium producers ETF again, and then a gold producers ETF. These are my largest three positions, simply because when the great capital rotation does begin to happen, I believe that in the first few years, essentially, you'll be looking at people putting their money into the safest, most well-established commodity producers in each of these sectors. So while the juniors will likely greatly outperform the majors as we approach the end of the bull market, the commodity super cycle, in the early stages, it's really good to be in the well-established names that will receive a lot of this initial capital flow coming into the sector. So just on the initial side, right now, I'm positioned mainly in these ETFs, which I do think will experience a lot of this upfront capital flow. So I have the SILJ and the SIL VanEck Silver Commodity Producer ETF, then the Global X Uranium Miner Producer ETF, and then the GDXJ GDX, again a VanEck Gold Miner Junior and Gold Miner Major producers. And so that's mainly where my positions are, but I will begin to name some names of lists, basically of majors, going down the list of a few majors that I've selected, and then a few junior exploration miners that I also have selected. And basically the majors are based off of the most value I see in fundamentals of the companies that are basically weighted very heavily in these ETFs. Also looking at companies that have very strong cash flow, very strong management behind them, that will be able to acquire a lot of high quality juniors later on. Basically companies that are not going anywhere and that will continue to produce very good cash flow, especially when this commodity super cycle gets going in the precious metals area. So to start off this list of a few of the companies I have in my portfolio, this is first of all, not an exhaustive list. I'm just putting out some of the names of the biggest majors out there in the category in which they produce, whether it's platinum, palladium, gold, silver. Basically, looking at the companies that I have the most enthusiasm about, based off of their fundamentals, and also based off of the management team they have behind them, and also based off of the strong cash flow history that they have behind them, and basically looking at companies that will have their cash flow multiplied as the commodity supercycle gets going. So number one on the list, I have Sibanye-Stillwater. This is a somewhat local company actually to where I live. They have one of their platinum palladium mines here in the Stillwater County in Montana, but looking at their what they mainly produce, platinum and palladium, this is a very industrial metal. I do expect platinum to actually perform fairly strongly along with the precious metals, simply because of its high industrial demand. And then moving down the list from Sibanye-Stillwater, I have Hecla, a silver mining company, fairly undervalued in relation to other silver miners out there in its category of a major producer. Then moving down, I have Fortuna Silver Mines. Again, with Hecla, it's been pretty undervalued in the prior year and a half, you could say, from where it's been. A very strong cash flow coming from Fortuna Silver Mines. Then a common name out there, Barrick Gold. I do have a small position in Barrick Gold. Again, it's just a major gold miner that is very commonly included in a lot of these ETFs that are going to receive a lot of the initial capital flows. And then Yamana Gold is the last one that I will mention today. This is not an exhaustive list again, but these are a bit of the more boring positions that I would say I have. They're not boring in the sense of I don't like them as much as some of the other ones, but some of the other ones I am a lot more optimistic about the return on investment that I'll get out of them, hopefully, in the next few years as the bull market in the precious metals sector really gets going. A lot of these smaller exploration resource companies are going to suddenly become very attractive to these majors, some of the majors I just mentioned, in that the valuation of these micro cap, in some case, stocks is going to go through the roof, basically because when the mineral deposits that they hold on their balance sheet are going to go up dramatically in value. So moving into some of these junior resource plays, I'm looking for very strong management teams behind them, because if they don't have strong management, they're not going to succeed in the long term. Yeah, looking at the resources that they have. So a lot of this does come from looking at the press releases that these companies make of the boring reports that they put out. I'm basically giving a rough idea of, okay, what is the valuation of the resources that they have underground on the land that they have the legal right to. So without further ado, I'll get into them. Number one, I have Go Gold Resources. Number two, I have Abra Silver. Number three, I have Silver Viper Minerals. Number four, I have Cassiar Gold. Number five, I have Alta Myra Gold. And then number six, I have Angold Resources. And all of these, I want to emphasize, are small positions. I do, some of these will probably not perform as well as other ones, and some of them might even go under. And this is not an exhaustive list either. There are other ones that I have as well. But all this being said, I do expect juniors later in the game to really outperform the majors. And so as the precious metal bull market really gets going, I will actually probably begin to rotate out of the majors as they begin to somewhat fade off, and then more into the junior sector, as that is really what outperforms the majors later in the bull market as it really gets going. And this will be a matter of years until this fully becomes apparent. Looking at the 1970s, for example, in the first few years of stagflation, you actually have the precious metals really underperforming other assets and other commodity producers. So it does take a lot of patience in this sector. So it is not for everybody. I really want to emphasize that this video is not to be taken as financial advice because, yeah, I could be wrong. Basically, I'm not a financial advisor. I don't know how to give particular advice for people at different stages in their lives. So again, this isn't an exhaustive list of the positions I have, but it's probably a list of the ones that I'm most enthusiastic about in each category. So all this being said, let me know what you guys think about all of these companies I just mentioned. Let me know down in the comments what you think about the idea of a commodity super cycle, whether we are currently in one, whether we're not quite yet in one. I'd love to hear your thoughts related to this video down in the comment section below. So if you are into this at all, just let me know what you think about it, and I hope to see you guys all again at some point.